Welcome to Business Insights, your trusted source for the latest in business. I am Olaoluwa Awe, and today, carefully packaged for you are business developments in Nigeria and globally, market updates and insightful analysis to equip you for the best business moves. Stay tuned for the business news now. Displeasure after the Association of Mobile Money and Bank Agents in Nigeria, AMBAN, in June announced an increase in service charges for POS operators. Under this increment, people who deposit between 1,000 and 4,900 naira would now have to pay a 100 naira service charge. Customers depositing between 5,000 naira to 10,900 naira will attract a service charge of 200 naira. Similar transactions between 11,000 naira and 20,900 naira will attract a service charge of 300 naira. 21,000 naira to 30,900 naira will attract a service charge of 400 naira, while 31,000 naira to 40,900 will attract a service charge of 500 naira. Also, 41,000 naira to 49,900 naira will attract a service charge of 600 naira. For withdrawals up to 1,000 naira to 4,900 naira, customers will pay a service charge of 100 naira, and withdrawals from 2,500 naira to 4,000 naira will attract service charge of 200 naira. Likewise, withdrawal from 4,100 to 6,400 naira will require a service charge of 300 naira, while withdrawals from 6,100 naira to 7,400 naira will require a service charge of 400 naira. Also, 7,500 naira, that is withdrawals of up to 10,900 naira will require a service charge of 500 naira. 11,000 naira to 14,000 naira, a service charge of 600 naira. 14,000 naira or 14,500 naira to 17,900 naira will require a service charge of 700 naira, while 18,000 naira to 20,000 naira withdrawal will require a service charge of 800 naira. However, operators under the umbrella body of concerned POS operators in Nigeria called the move outrageous and anti-people. Speaking about the situation, the chairman of the group said the new charge would compound the trouble of many Nigerians. He also said the group had come up with a service charge for AMBAN to consider and urged the Central Bank of Nigeria, CBN, to review its cashless policy as well as increase withdrawal limits for operators. The Debt Management Office, DMO, conducted a bond auction in July 2023, reopening 4 bonds with different maturities. The auction received significant interest, with total bids worth 945.14 billion naira for the 360 billion naira offered. The allotted amount was 656.74 billion naira, and the marginal rates for the successful bids were 12.50%, 13.60%, 14.10%, and 14.30%. The highest subscription went to the 30-year bond, indicating investors' interest in longer-term debts with higher yields. The inflation rate in Nigeria rose to 22.79% in June, contributing to the demand for risk-free investments like government bonds. Reopened bonds have the same features as the original issuance, but are offered again to raise additional funds without issuing a completely new bond. Away from that, fuel consumption in Nigeria has reduced to 46.38 million litres per day after the removal of fuel subsidies. The chief executive of the Nigerian Midstream and Downstream Petroleum Regulatory Authority, NMDPRA, Ahmad Farouk disclosed this information during a stakeholder meeting with oil and gas downstream operators in Lagos. He says out of the 56 companies that applied for import licenses to supply petrol, only 10 committed to importing. The current consumption level represents a 35% reduction compared to the pre-subsidy removal figure of between 62 million litres per day to 71.4 million per day. Now, the Poultry Association of Nigeria, PAN, has reacted to the rising price of maize, a major feed for birds in the subsector. They also say by addressing these challenges, there is an opportunity to rejuvenate the poultry industry and ensure its sustainable growth. PAN's National President Sunday Eze-Obiora and PAN's Director General Onalu Akpab signed a statement emphasizing that since the price surge and scarcity, it has become difficult to feed the birds maize and remain in business. They said the surge has impacted the entire poultry industry, resulting in a sharp increase in the price of eggs, a daily source of protein for many Nigerians. According to data from the National Bureau of Statistics, the price of medium-sized agric eggs has risen by over 118.34% due to the drastic decline in maize imports by 97.91%. Believes that limited local production due to security challenges also led to the increases. And Chinese property giant Evergrande has been grappling with a debt crisis and has now disclosed that it incurred a combined loss of 581.9 billion yuan. That's $81.1 billion US dollars in 2021 and 2022. The company, which defaulted on its debt in late 2021, finally reported its long-delayed earnings to investors in Hong Kong. Evergrande's significant losses underscore the impact of the property market turmoil in China, which has left the firm burdened with an estimated $300 billion in debt. The company attributed the loss to factors such as declining property values, diminished asset worth, and higher borrowing costs. The introduction of new borrowing restrictions for real estate firms in China in 2020 had also created upheaval in the country's real estate sector. Now, Swiss watchmaker Swatch has taken legal action against the Malaysian government for seizing its LGBTQ-themed watches from its stores. Swatch's Pride-themed watches were designed to celebrate diversity, with the company describing them as symbols of humanity that speak for all genders and races. The watches, part of Swatch's rainbow-colored Pride collection, were confiscated by Malaysian officials who claim they feature LGBTQ elements. Swatch is seeking damages and the return of the watch is valued at $14,000. But homosexual activity is illegal in Malaysia under both cellular and religious laws, carrying potential prison sentences or corporal punishment. Swatch filed a lawsuit last month at the High Court in Kuala Lumpur, but the case is expected to be heard later this week. Justifying the seizure, the Malaysian authorities stated that its watches could disrupt public order or violate the law. However, Swatch argues that the watches do not promote any sexual activity, but are a representation of peace, love, and joyous expression. The company claims that its trading reputation has been harmed and its business and trading figures suffered in the aftermath of the seizures. And that's the business news. I am Olaoluwa Awe. Now to the market trends. The Nigerian Stock Exchange NGX closed with a total of 868 million shares traded in 8,970 deals, adding up to a trade value of 42.8 billion naira compared to the previous trading day. There was a 22% increase in the number of shares traded and a significant 210% increase in the total value of those shares. The current market capitalization of the Nigerian Stock Exchange stands at approximately 34.7 trillion naira. And today's trading had 117 companies listed on the NGX, with 50 of them experiencing gains in their share prices and 20 seeing a decline. NEM Insurance Company had the highest increase in share price, rising by 10% and closing at 5.94 naira per share. Honeywell Flour Mill, MPF Microfinance, and Eternal Oil experienced gains of 10% each. On the other hand, Japan Gold and Ventures had the highest decrease in share price, dropping by 10% and closing at 0.81 naira per share, followed by FTN Cocoa Processors, 10%, Courtville Business Solutions with 8.64%, and Sovereign Trust Insurance also experiencing declines ranging from 8.16%. The most actively traded stock were FCMB Group with 154 million shares traded, followed by Japan Gold and Ventures 111 million shares, Dangote Cement 105 million shares, and Access Holdings 49.5 million in shares. Now, still in Africa, Johannesburg Stock Exchange JSE, at the end of trade, there was 247 million shares traded in 287,358 deals with a trade value of about 21.9 billion rands. When compared to the previous day, there was an 8% increase in the number of shares traded, a 6% increase in the total value of those shares, and a 3% increase in the number of deals made. The current market capitalization of the Johannesburg Stock Exchange stands at approximately 21.6 trillion rands. Similarly, at the conclusion of the day's trading session at the Nairobi Securities Exchange NSE, it was reported that a total of 11 million shares were traded in 1,066 deals. These shares had a combined market value of 270 million Kenyan shillings. Comparing these figures to the previous trading day, there was a significant improvement of 177% in the volume of shares traded, a substantial increase of 238% in the total value of those shares, and a 15% improvement in the number of deals made. The current market capitalization of the Nairobi Securities Exchange stands at approximately 1.76 trillion Kenyan shillings. Away from Africa, Dow Jones Industrial Average DJIA represents a group of 30 big companies in the U.S. and it closed trading on July 18, 2023 at 34,944.38 points, gaining grounds by 359.03 points, which is an increase of 1.04%, indicating a slight appreciation in the overall value of the Dow Jones. And talking about Russell 2000 Index, which represents a group of 2,000 smaller publicly traded companies in the United States, on July 18, 2023, the Russell 2000 Index closed at 1,984.30 points, indicating an upward trend by 19.00 points, which is an increase of 0.97%, revealing a slight appreciation in the overall value of the Russell 2000 Index. Now, let's discuss the FTSE 100 Index, which represents the top 100 companies in Great Britain. It closed trading at 7,456.32 points, surging by about 49.90 points, which is an increase of 0.67%. Now, this indicates a slight appreciation in the overall value of the FTSE 100 Index. But DAX Index, which represents the top 30 companies in Germany on July 18, 2023, closed at 16,124.73 points. It went up by 56.08 points, which is an increase of 0.35%, showing an uptrend in the overall value of the DAX index. Now to the commodities market. Moving on, the price of gold is currently at $1,981.38 US per troy. Also, the price of silver is currently $24.92 US per troy ounce. Brent crude is currently selling for $79.64 US per barrel. Additionally, cocoa currently trades at 3,282.12 British pounds per ton. Lastly, wheat currently sells at 265.38 US cents per ton. Those are the market trends for today. Next on Business Insights is the analysis of Nigeria's point of sale POS market. Putting this in perspective before we get to the analysis, well, OPay and PalmPay, two digital banking platforms owned by Asian companies, have emerged as the leaders in the point of sale market in Nigeria. Together, they account for over 1 million mobile banking agents. And according to data from the Nigeria Financial Services report by Intelpoint, OPay, a fintech company that entered the market in 2018 through the acquisition of a local payment platform, currently leads the POS market with 563,262 agents. On the other hand, PalmPay recently announced that its agent network has reached 500,000. Now, the combined number of banking and mobile money agents in Nigeria is estimated to be over 2 million, with other companies playing in this field. This was as reported in the 2023 State of the Industry report on mobile money by the GSM Association. This implies that these two companies collectively account for at least 50% of the agency banking market in Nigeria. Money Point with 322,266 agents according to Interpoint, and MTN with 264,000 agents also according to company data, completes the top 4 players in the market. We'll have the business owner of another key player help us make sense of how this sector works and what is needed for growth. Stay tuned. Welcome back to Business Insight and Souk News. Once again, I am Olaoluwa Awe, and today we are talking about the mobile money market in Nigeria. You know, if you watch that brief analysis or background analysis I made earlier, there seem to be some two major leaders in the markets, and they're Asian companies. There are also some other people leading in the market. But we're going to be talking to a major player in the mobile money market today. He is Bade Adesemowo, the CEO, social lender, all the way from the United Kingdom. He'll be speaking with us today via Zoom. And just so that we understand better who he is, he has a background in engineering, 20 years experience in software technology, and best use of technology, really. He's a technology person. And do we have Bade Adesemowo on the line? Good morning, Bade.
Hi, good morning. How are you doing?
Good morning, Bade. Good morning.
Thank you for having me.
Oh, thank
Just
you.
a
It's a
slight correction,
pleasure.
I'm CTO.
You are? Please say that again so
I'm
that
the
I can.
CTO of Social Lender, not the CEO. Just a
Oh,
slight
the
correction. Thank you for having me,
CTO.
though.
Oh, that's the Chief Technology Executive Officer, right? Okay. Bade, I'm not sure you can hear me clearly. Can you hear me clearly?
I can hear you clearly.
Okay, so let's talk about the opportunities in the digital banking, sector in Nigeria. We know that you have a mobile money platform, a social lender, but let's just be a little bit broader in this sense. What are the different opportunities in this sector in Nigeria?
So the opportunity is really large, and the reason is very simple. Within Nigeria at the moment, we have less than 60 to 70% financial inclusion. The reason for that and how you would know that is right now in Nigeria, we have less than 60 million or thereabout unique BVNs. And at the same time, we know we have over 100 million adults in Nigeria. So if you do the maths, you would find out that there are at least 40 million Nigerians who are currently financially excluded. And so that's a large market that needs to be solved for. We need to solve for them being able to be financially included, but then also to be economically included. And that's part of the reason why the mobile money industry has been started, but there's still a huge gap within that industry. So there is opportunity for industry players, but then there's also opportunity for SMEs as well, people that can go into the space, into their own locality, and then start what we call right now POS business.
Okay, so we know the POS business. It's very popular here in Lagos and all around the country. But what are the different roles people can come in to occupy in this subsector? We know people play in different capacities, but we just want you to explain it for people who are really looking forward to this.
Okay, so one of the roles people can play is that they can become an agent. So when you are an agent, what that means is that you have one POS machine or maybe a few POS machines in your locality. And then what that means is that people can come to your location to be able to deposit money or to withdraw money and other services like maybe paying bills and so on as well. You could also choose to become a super agent. And a super agent, what that does is that you are able to aggregate many of these smaller agency banking players. You're able to aggregate them for one of your providers. And then, of course, you can get a CBN license as well for you to then play in the space as one of the industry players.
Yes, let's even talk about mobile money platforms like yours. What are the requirements for playing in this capacity?
Yes, I was going to correct that. Our platform is not a mobile money platform. Social Lender does alternative credit scoring, but we do work with mobile money providers and we do work with financial institutions as well. Now, you're asking as regards the requirements. The requirement is to have the requirement to become a mobile money operator is for you to have a physical location, is for you to be able to register with any one of the providers. We've got a number. I'm not sure if I'm allowed to mention some of those providers on this, but there are quite a number of providers in the space that you can register with, either as the agent or a sub-agent.
Oh, that's good to know. And what are the key collaborations needed really in this field for you to run a full business?
So one of the key collaboration is if you want to run the business, a key one is you want to have a good relationship with a bank, right? Because part of what you will need to do is to be able to have a bit of cash float for customers who want to withdraw, and also a bit of cash flow for customers who want to deposit money so that you can also then bank that over a period of time. With the POS agent, they take a lot of risk because they need to hold on to cash depending on what kind of volume they are looking at in their location. Another one that is probably necessary is a bit of security as well, because and that could mean different things in different places. Lagos is not Nigeria. So Lagos is urban and all, but there are many people and some of our partners and agents working in remote locations where you need to spend at least 30 minutes to an hour on public transport to get to a commercial bank, to a bank. And those kinds of things require security of some sort, whether it's the fact that everybody knows you and everyone within the community is protecting you or something along those lines.
Also, we need to talk about the regulatory agencies' involvement in this line of business. What does it look like?
So the main regulatory agency is the CBN. The CBN licenses the main operators, and then the main operators are able to bring in other players and register them within their own ecosystem. But recently, we've also had the FPCC, the Consumer Protection Agency, also come in to play a role, an interesting role really, because their role within our space in Nigeria is for them to protect the consumers. So recently we had the Mobile Money Operator Association trying to fix prices, and then the Consumer Protection Agency came out to say, oh no, you cannot regulate prices. Yes, you can regulate things like, how you operate, the interest of the customer, but then if you go to the position of now fixing prices, you are going too far. So we've got a few of those agencies coming into play within the Nigerian space. Maybe too many, but then we do have them.
Yes, let's go back to the CBN as a major regulator here and maybe a licensor. So what are the requirements from CBN for you to really be in this business space?
So the CBN requirement starts with you having a deposit of about 2 billion naira for you to be able to register and get a license. The licensing cycle is also, they do it about twice a year, if I remember correctly. You need to have people of good reputation on your board. You need to apply for the license with some of the requirements. They are on the CBN website. And then you are able to then go through the process. But the key one that is the showstopper for many players is the fact that you need to deposit that cash, about 2 billion naira, in CBN for the duration of the process of the duration it will take to process your license.
Oh, so is the license free, or how much do you pay for that? And can you please talk more on the duration? How long does it take to get a license to do this?
It could take up to a year. The license is not free. I do not remember the current amount it is. The license itself is not free. It takes just about a year for the entire process to happen for you to get your mobile money operator license.
Okay, so you spoke extensively on the FCCPC being a regulatory agency, watching out for the interest of the customers. But the CBN, do they also play any major regulatory role in ensuring that your business is stable and also protecting you as the business person or the group and the customer?
Oh, yes, of course, because the CBN's role within our economy is to ensure that it's stable, as financial system stability, that's their own major role. And they do also understand the role of trust, which is the major aspect within the entire space. Trust in the sense that if I put my money here, it's going to get where it is that I expect it to get to. Trust in the sense that, oh, this money will not just disappear, and so on. So that's one of the key role of CBN in terms of within our space. Now, CBN obviously would then license the players and ensure that the players are playing by the rules. The players, and some of those rules are not just for the licensed agency, but even for their agents as well. One of the ones that many people flaunt very often is that whenever anyone comes to deposit or withdraw funds from that agent, they need to actually do some sort of registration to know who exactly it is that is doing that transaction. A few people have been burnt. A few people have gone to EFCC and all because fraud was conducted through their terminal, but they had no idea who it was that committed that fraud because they just saw people coming in that wanted to withdraw and they didn't get the proper details that they are supposed to within that locality. And these are part of the rules that is guiding each POS operator.
Yes, now let's talk about penetration. In my introductory statement, I mentioned how in the mobile money sector in Nigeria, there seem to be two major leads.
I lost your audio for a moment there.
Welcome back to Business Insight on Souk News, and I am Olaoluwa Awe, speaking with Bade Adesemowo of Social Lender. A special apology for the technical issues there. You couldn't hear us a while ago, but we have sorted that out thanks to our technical team. Now, Mr. Bade Adesemowo, welcome back to Business Insight.
Thank you for having me. Thank
Yes,
you.
thank you. So let us get back to the question I asked earlier. I was talking about penetration of this mobile money companies in Nigeria. We're talking about the point of sale companies. About two major companies are the leaders from the last information we have from Intel Point. And they were like, they have almost 50% of the market share of what we have in Nigeria today. What do you think are the factors that allowed these Asian companies, one incorporated in Hong Kong, and another one, a very, it's a fintech subsidiary of a popular manufacturer and of smartphone brands like Techno. What were the major factors that really allowed them to really gain ground and stabilize in Nigeria in such a manner?
So for one of the players, they spent a lot of money around market penetration. They spent a lot of money doing, in fact, free transactions, but those transactions were not free to them. What was going on really is that they were using investor money to pay for those transactions, but that was part of their marketing budget. And for the player, I'm not sure if we're allowed to mention their names, but for that player,
Go on.
they were able to grow because they also had a super app that was doing many other things aside from the money transactions and mobile money transactions. So that growth was phenomenal. But then with some of the challenges that we had in the space recently, that helped the growth as well. When we had the challenge with Naira, with the Naira scarcity and all of that, we had more people adopting mobile money operators, and to a large extent, this player. The second player was able to grow with loans, right? Because they were able to give loans that some of them ended up being bad debt, but they were able to give loans to people within the space. And if I'm able to give you loans and then you're able to spend it and use it within my platform, I'm able to study how you use money. And because of how you use money, I'm able to probably give you more as well. So those are two different strategies that two different players use to be able to enter and penetrate into the space.
Are these key strategies that the other players should, imitate to grow their business as well?
Not necessarily. There are significant opportunities out there. As I mentioned when I started this conversation, there is a huge amount of people that are still unbanked or underbanked in the Nigerian space. So there's still a big room to grow. Over 40 million individuals that we're talking about. Yes, their transactions may be low, but the volume itself is significant. And because that volume is there, these are places where we need to then try to penetrate as an industry. Yes, they can use some of these strategies, but some of them can be very expensive, right? So the strategies are there, but the key thing is that we should look beyond just the urban areas. We should look beyond just the places where we already have multiple players, because there's a green field out there of people that are currently underserved.
Now, let's also talk about the massive agent networks that this POS operators seem to have. We need to talk about how they are able to manage over 500,000 agents. We also have other companies like MoneyPoint, MTN coming up with over 200,000 agents, over 300,000 agents. Please help us understand how that works.
Well, so the truth is that a MoneyPoint agent can be an MTN agent, can be an OPay agent, and also we have quite a number of duplication in that space, because what happens in the ground is that people would gravitate towards whoever will pay them more. So if I have multiple POS terminals in my shop, I can decide that this is the one I'm going to use because there's an incentive for me to use that today. That's fair, that's fine, but that's part of the reason why you would see those significant numbers, because each operator probably is working with multiple players in the industry. So each POS point is probably working with multiple players. And in some cases, some of those numbers are not quoting numbers of active agents that they do have. They are quoting numbers of registered agents that they do have. So that's the reason why you see that significant number. But then when you go into the field, you realize that, oh, these numbers are not as many as is being quoted by the industry.
Now, let's talk a little bit more about your own company, Social Lender, where you are the CTO and a co-founder. You explained for a bit what you do, but from what your name states, Social Lender, I will assume that you are a lending platform of some sort, right? Help us understand better.
So we are not a lender. We
Okay.
license a technology that helps lenders and other financial institutions. What we do is an alternative credit scoring solution based on people's social reputation. We look at people differently. We look at people looking at their community, their engagement, their network, to be able to give a score for the individual. Now,
So
based on that score, they
if
are
I
able to get access to financial services. One of those is lending. So we have a number of partners on our platform that are able to lend on our platform. But then we also have micro insurance on our platform. We also have farm input, which is one of the ones that is really growing. Fertilizer is what we've started with in northern Nigeria, distributed on our platform, where farmers can borrow fertilizer and then pay back at harvest. So what Social Lender does is alternative credit scoring, a new measure of trust to be able to include more people into the financial space and help them to become economically included.
Because one of the major issues we've had with lending platforms in Nigeria is Nigerians, some Nigerians claiming that when you borrow from some of these lenders, and the way they come at you to pay back, they begin to call your friends, they have access to your phone numbers. In fact, I still got a message from a platform yesterday. The name of the person they claimed borrowed money from them, I don't even know. I get messages like this from time to time. What do you say to this?
So it's a problem in the industry, and it's a problem that we are now trying to solve. We are self-regulating as an industry, and so we're trying to solve that problem. But some players do not just care about the impact to the consumer. But then we've got the consumer protection also playing a role to try and solve this problem. It should not be so. You should only be contacted if you decided to be a guarantor to this individual that was going to borrow money. But what happens is a lot of players are disbursing just based on getting data from people's phones and all of that to say these are everybody that is stored on your phone, and then based on that, because you have maybe 100 contacts or 200 contacts, they disburse money hoping that they threaten you, threaten your family and so on, then you would be forced to pay back. It's a dead business model. It's a business model from maybe 7 years ago, 10 years ago. It's a dead business model at the end of the day, because you will find out that the bad debt rate is really, really high. What the platforms should be doing is that they should do their due diligence. What the platforms should be doing is that they should ensure that the people that they are borrowing to are people that will be likely to pay back. They should do the work before they give out the funds rather than after.
Isn't that a part of what you do at Social Lender?
So what we do differently is that we use what we call social guarantors and social referees. So on our platform, a user would come and a user is able to say, these are the people that can guarantee me. We contact the guarantor, not for the transaction, but for the reputation of the person, to say, Mr. A is on our platform. Are you willing to guarantee this person up to the sum of maybe $10, $20, $30, and all of that? You would not know when Mr. A is taking a transaction, but what you've done on the platform is you've said that I know this person, I trust this person. If he defaults on a small loan of X amount, I would pay on his behalf. So what has happened is you've been contacted. So you are not being contacted at the end of the transaction where Mr. A has defaulted, because we've asked you earlier to say, do you guarantee this person? And you've said yes to that. And we confirm that on a regular basis as well. Because what we are building at Social Lender is not really a lending platform. What we are building is a social network for trust. Right? So what we've done is that we built a social network for trust there to say, we now know a couple of people that trust this person to a certain tune, and then financial institutions can come there to transact with this person using for lending one of them, but yes, insurance, farm input. We're working on launching carbon credit as well on our platform.
Oh, interesting. Now, let's talk about how lending platforms, manage regulatory agencies in this light. For example, the FCCPC, from time to time, they talk tough and they say we would delist this number of applications if they harass customers, would delist this. We hardly see companies being delisted. A good number of these companies are still operating. But how do you manage or do regulatory compliance, or how do you think it should be done?
So how we do it is we are a technology company. We license our technology to players who are regulated. CBN regulated, or some of the players have lending licenses, and those players also get the new license given by the Consumer Protection Agency as well. So that's what we do on our platform. So we are not a lending company.
I understand, but I understand that I understand that you work with them in some capacity. So how do you think they navigate regulatory compliance?
So how they navigate it is some don't care, right? But then how they should navigate it is that if you are required to have a number of licenses for you to play in the space, you need to ensure that you have those licenses. A number of regulated players would confirm that you have all of those licenses and all of those permissions to operate, but some are still operating in a gray area, which should not be so.
Thank you very much. Let's quickly go back to the point of sales service providers. And one of the major things that have made Nigerians really, patronize them is the fact that they believe that they have reduced chances of transaction failure. They believe network is always faster with these POS operators, unlike the regular bank app transactions. What do you think is really responsible for that?
So for the POS operator, they ensure that they work with multiple providers. And so for the customer, they don't really care which provider as long as their transaction is done. So that's the reason why a customer would think that, oh, they don't have the kind of challenges, because for the operator, what they've done is just to ensure they have multiple points of failure to say if one doesn't work, the other one will work and they can continue doing business. For the rest of the industry, we need to do better. We need to do better in terms of uptime, in terms of security, in terms of the kinds of solutions that we're using to operate in the space. The rate of failure is not something that consumers want to see. And something interesting that you start seeing with some players now is that they start revealing to you to say, Mr. A's transactions are currently going in the last 1 hour. This other bank is not going in the last 1 hour. So you see that on your platform. So you can decide to say, oh, I want to send money to this particular bank or this other particular bank.
Yes, as we wrap up the show today, Bade Adesemowo, what's your general advice for the people playing in the point of sales market and in the digital lending market? Especially those who want to step up.
Digital lending market? Oh, please go ahead.
Yes, I just said especially those who want to step up. We started the show with saying that there are some top 4 companies leading, in the market. But there are a good number of Nigerian companies also coming up. So what advice do you have for them for growth?
My advice is that there's a huge space. It's really, really big. It's millions of consumers that are currently unserved or underserved. Rather than focusing on Lagos, Port Harcourt, and some of the urban areas, maybe you want to take a look at the rest of the unserved market. It's really large. Take a look at the CBN data. The data is there for you to see, to say these are places that we need to penetrate. The value of each customer may be low. However, there's a huge volume, which means that this is something that can become very lucrative, and that's part of what we are doing as a platform at the moment. Now, for the operators themselves, for the POS agents themselves, what we'll just say is that please ensure that you are playing by the rules. Ensure that you know every single customer that is coming to transact in your premises, because there's a high rate of fraud, and one of the exit points is through POS terminals. And when there's an exit point at your POS terminal, you have a question to answer. So ensure that you either have CCTV or whatever, but even if you cannot afford that, just ensure that you know the customers transacting in your premises, because only one customer could put you into trouble.
Thank you very much, Bade Adesemowo, the CTO and co-founder, Social Lender. He's been very helpful today on Business Insights. The lessons have been mentioned. I hope we take them to heart. I am Olaoluwa Awe. We'll continue this tomorrow, same time, same station. Have a nice day.
Thank you.